Time now to take a look at some of the day's business news with France 24's Cole Stangler. Cole, going to start with negotiations in the US Congress over that landmark $1.9 trillion stimulus plan. It's been going on for a while. What's the latest?
That's right, Eve. The Biden administration now reportedly agreeing to a small cut in the recovery bill. It's a compromise designed to win support from moderate Democrats in the Senate and would see fewer Americans receive so-called stimulus checks, those direct payments we've seen go out twice already during the crisis. The latest proposal would basically limit eligibility for the payments. Individuals earning less than $75,000 a year would still receive a $1,400 check, with the payment declining for those earning more. While the original White House bill phased out payments entirely for those earning more than $100,000, it's now lowered that limit, to $80,000, as you can see there. It's all designed to keep the Democrats' razor-thin majority united, with the Senate slated to kick off debate as early as today. Talking to House Democrats on Wednesday, Joe Biden said the plan's still a popular and necessary piece of legislation.
And this is a case where every single piece of the bill you passed addresses a genuine, desperate need for the American people. Each piece isn't just defensible, it is urgent and overwhelmingly supported by the people. It's good policy and it's good politics.
Well, next up, German carrier Lufthansa has reported a record loss.
The airline says it lost some 6.7 billion euros last year. Its CEO calling it, quote, one of the most challenging years in the firm's history. With the pandemic grinding travel to a halt, Lufthansa recorded a more than 60% decline in revenue when compared to the previous year. The carrier also digging in for a slow recovery. It says it expects to reach around 90% of its 2019 flight capacity by the middle of the decade. Let's take a look now at some of the day's trading action, starting with those European markets, which are in negative territory. Losses being driven by concern over rising U.S. bond yields. That means an uptick in long-term borrowing costs. You can see there, FTSE, the CAC 40, and the DAX in Frankfurt all below the flat line. Asian markets also in the red, the Nikkei closing down more than 2%. Losses across the board in Shanghai, Hong Kong, and Seoul. Oil prices, meanwhile, on the rise. Benchmark Brent crude trading there, as you can see, over $64 a barrel. That's ahead of today's meeting of OPEC Plus, a group of oil-producing countries and allies. They'll be deciding whether or not to raise output after months of keeping supply low. Some investors, though, evidently not convinced a hike is coming, judging by those figures there.
Meanwhile, Cole, the end of an era in Las Vegas?
Yeah, the firm Las Vegas Sands is selling its historic Venetian casino resort for some $6.25 billion. Plans to use the proceeds to continue its expansion in Singapore and Macau in particular. It's where it's planning a London-themed resort along with David Beckham. The firm has long been the biggest operator on the iconic Vegas Strip, but after this sale, it won't have a spot on the famous avenue. The move also comes 2 months after the death of owner Sheldon Adelson.
And finally, from you, Cole, you're looking at China's economy ahead of the annual meeting of the country's legislature, the largely symbolic National People's Congress.
The economy will be on the agenda at Friday's opening session, with authorities expected to unveil new growth and spending targets. The meeting also comes amid a recovery that's proven fairly strong when compared to the rest of the world. Kamil Nedalek reports.
It's the year of the ox, but 2021 might as well be the year of the dragon, as the Chinese economy is set to come roaring back. Like the rest of the country, this car dealership was hard hit in the first half of 2020, losing over €1 million. But China's economic engine got revved up again in the second half, becoming the only major economy to grow in 2020. This firm says the bad times are over.
想买车的人，他只不是消费之后了。 所以说这个量还是都说，虽然是降低了，但是它不会买车的购买力，我觉得还是没有减弱的。
This year is a centenary of the Chinese Communist Party and is the start of Beijing's 14th five-year plan. The CCP wants to mark the occasion with ambitious goals, as it firmly puts the coronavirus crisis behind it. The government will also move away from monetary stimulus and instead favour fiscal stimulus like tax cuts. It aims to boost domestic demand by creating jobs and increasing welfare spending. Leaders also want to develop the country's technical capabilities.
一个从这个产业链低端往这么中高端去升级的这么一个过程当中，倒逼我们的政府实际上在这2年加大力度去重视这个科技创新，所以毫无疑问的说，“十四五”规划里面，科技创新一定是摆在第一位的。
As China kicks off a milestone year, it has its sights set on another milestone. surpassing the United States as the world's largest economy, which could happen before the end of the decade.